Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at GameStop, GME. Okay, we're going to do as we always do on this channel. We're going to start with our basic analysis first and Elliott wave analysis second. Quick note on the Elliott wave analysis section of this video, it's going to be quite a prolonged part of the video because we have 3 separate counts to consider, all of which are valid. This is the problem when you're dealing with such extremely volatile stock with such huge swings in it. It opens up an awful lot of options of what could possibly happen, but I've done my best to map out each of them. Anyway, we'll deal with that when we come to the Elliott wave section of the video. For now, we're just going to deal with the basic technical analysis. So in order to do that, let's give you a quick rundown of the chart in case you're new here. We're going to clear the Elliott wave count out of the way, which is all the numbers and letters you can see on the chart. Right. We have 4 exponential moving averages on the chart, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We are on the weekly time frame in arithmetic scale. I've just noticed there's one thing missing from the chart that I need to add back on, which is our visible range volume profile that we use. There we go. Right, we have a volume profile on the right hand side which I just added, which shows the various peaks and troughs of the buy sell volume, the extreme of which is marked by the yellow dashed line here, which we call our point of control. We have a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange and a 9 to smooth. We have an RSI set to a 10 close with the green 30 level representing oversold conditions and the red 70 level representing overbought conditions. We are on the weekly time frame in log scale since it's the easiest way to look at the chart. This is how the chart looks in arithmetic scale. This is how it looks in log scale. So this is how we tend to observe GameStop because of such an unprecedented run up in price. We have to try and keep things, observable. Right, so on the weekly time frame, what can we see? Well, we've had, after all this violent swing up to all-time high and violent swing back and violent swing back again, we've actually had a significantly less volatile period of price action. Still huge in terms of the average stock. I mean, if we look from swing high to swing low, it's still 66% swing down, up and down. So, a very big range for what is essentially just a month's worth of price action. But from GameStop's point of view, this is an internal correction of this here, or part of a new impulse wave. I'll explain what I mean by that later. But to give you an idea of the difference, this swing high to swing low is 92%. Okay, so far greater. This swing 92%, this is only 60 odd percent. So yeah, a bit quieter for GameStop in the last few weeks, but still above the 10 exponential moving average, the 20, the 60, the 250, miles away from the point of control. Still green bars on the histogram, although they are getting smaller. We're into dark green bars now, they're getting smaller. The short-term moving average is flatlining, not rolling over, maybe showing the first signs of doing so, but not done so yet. Hasn't crossed over the 20, but we are losing bullish momentum. But we were losing bullish momentum back here as well, and then we bounced again. So no sell signal here. We do have a significantly lower reading on the RSI, back below 60 into neutral territory. So we have cooled off significantly on the RSI now, back into neutral territory. We're no longer overbought on the weekly time frame, which, if we're going to accommodate potential future moves up, then a nice cooling off period back into at least neutral territory would be expected. It is quite common though, after such a huge swing to overbought conditions, to see a swing back down to oversold conditions. No sign of that happening yet. Right, let's come down to the daily time frame. Okay, on the daily, sandwiching, we've got the exponential moving averages are all kind of starting to come closer together to one another here, and the price is currently sandwiched in the pre-market. As I record this, obviously this will no longer be true by the time you're viewing it, but at 185.10 at the moment, right in between the 10 exponential moving average and the 20, the yellow line and the blue line here. You can see how this move up from the low on the 19th of February to the high on the 10th of March, which is so far you can consider to be part of an internal correction of this previous high back on the 28th of January. You can see how the subsequent swing low came straight to the 60 exponential moving average to the tick, bodied on it, wicked through it, bodied, and then the body of the candle closed above it here. We can see we had a huge rebound back up, so wicked all the way, the body of the candle came all the way back up to here with the wick just exposing through the 60. So we closed way above the previous week's candle here, embodying it completely, came straight back up to the 10 exponential moving average, and now we've just spent some time going sideways and we'll continue to do so. So we're coiling up. We're coiling up for either a pop up or a pop down, but that's what happens when we get these kind of sideways consolidations. We can see how on the daily time frame on the MACD we had that bearish crossover of the short-term moving average over the long term. We had a pickup of bearish momentum, and then it's been dying off ever since as the bright red is given away to the light red color. The short-term moving average has started to flatten out, but no sign of a bullish crossover back to bullish momentum yet. So can't get our hopes up too far yet. Did not reach oversold conditions on the daily time frame. Got below the neutral zone though, and got down to around 33 on the RSI, back into neutral territory between the 40 and the 60. So all of this on the weekly and daily time frame is saying the same thing. We are consolidating sideways. We are building up pressure, and we are going to get a release of that pressure sooner or later. Right. That's the basic technical analysis out of the way on this time frame. Anyway, let's just come down to 4 hour for a minute and see if there's any clearer picture or divergences to spot. Currently there is no lower low since this swing low. This was supported in oversold conditions. We bounced back into neutral territory. On the 4 hour, the exponential moving averages are coiling up even closer. This will be true on all subsequent lower timescales. This coiling will become more extreme. So if we come down to the 1 hour, you can see how the 250s joined the party. The 1, the 20 and the 60 are basically inseparable at this point. As this coiling continues to occur, we should start to see some kind of pattern which supports it. Now the most common pattern where we have high low high low high low high low and this coiling pattern going on is normally a triangle, and that is one of the options we'll be looking at in a moment. So let's just come back to the daily, and we're going to bring up our count. Okay, so like I said, there's one of 3 counts to deal with here, and I'm going to walk you through all of them. This is the issue with dealing with such insanely volatile stock, insanely volatile asset. Once you get these huge kind of swing moves, the idea of figuring out precisely what count you're in and at what wave degree practically impossible until you get confirmation of either breaking a previous high or setting a new low. We've done neither since. We're just trading inside of the high and inside of that low. So figuring out whether this is motive, figuring out whether this is corrective, this is the problem we've got at the moment. So let's start with the most bullish scenario so far. We're going to go full screen here, keeping an eye on the count. We're going to come down to the 1 hour. We're going to work our way up in log scale into the bullish count. So the bullish count assumes that the huge move up, let's just delete that ABC, we don't want that, save the chart. The huge move up to the high in the 28th of January was a wave 1 on primary degree. We're then assuming that we've got a 3 wave move down, like this, A, B, C, very funky looking, but it is what it is. It can be interpreted slightly differently as a zigzag, I guess, but this huge initial move down has to be considered the A wave. You can't not consider this the A. If you're counting it as a 3-wave structure, you'd have to count it as a 1, 2, 3, 4, 5. Otherwise, I've gone for a 3-wave structure correction. So much volatility, you've got to be willing to, be flexible. And I get the count down here in 3 waves, A, B, C, 5 waves complete. This is roughly the territory where I called my gap cover trade back a few months ago now, which was to come back up and cover all this huge technical damage to the chart, which had to be repaired via price action, and it has been since closed. That gap is now dealt with and over with, and we've gone higher since. So counting up from below on the 19th of February, we have minor wave 1, 2, 3, 4 was a triangle, and then 5 into intermediate wave 1 complete. So the next bullish, so that's saying primary wave 1, 2, intermediate wave 1, 2, which suggests pricing just on Venus or wherever. Just, I know everybody says moon, but it's just like, it's beyond imagining. If this count is correct, then this, it's just crazy how high this is going to go. But if, that's the question, isn't it? So from here we've got an ABC again, um, playing down. Obviously that's not there yet, plonker. Very similar to this initial move down. If you look at the way this extreme pattern has emerged, these huge swings in volatility, you got primary degree move ABC, intermediate wave ABC, looking very similar to one another. The same kind of volatility, just on a smaller scale, as a wave of lesser degree. Right, so let's just switch that off. Remember, this is the most bullish interpretation. We will come and look at a vastly different alternative before we finish the video. So let's come down to 15 minutes and just work our way down to the bottom here and interpret this as best we can. So we've got an A, B wave here with an A, B, C on the minute time frame. So we've got an A minor wave, huge sell off here. A, B wave triangle on the minute time frame, hence why it's labelled minuet, and then a pop into the C to complete the B. So this is the A, B. We then have a small wave, a diagonal into a wave 1, 2, and then we've got a big flat pattern in a 3-4, completely out of scale with the wave 1, and then we've got 5 waves down with the 5 of the C, five minuet waves down into 5th minute wave into the C, into the 2. So we've gone 1, 2, and we've gone 3 wave structure, 3 wave structure, 5 wave structure. So we've done a flat pattern in the 2. Right then, and then we've got what you could argue here. And if we just one of the things which supports this idea that this is a 1-2 is where we retrace to. So let's just get our Fibonacci retracement tool up, come to the bottom, come to the top, and you can see that we found support exactly. I mean, algo driven perfect to the tick here at the 50% Fibonacci at 116.59. So I've marked that on the chart. Before we saw this correction, I said a likely area we would stop, if you go back and look at previous videos, was at the 50% fib in log scale, and we came to it precisely, literally ticked it. So since there, we have to interpret every move since that as the completion if we're going to remain bullish in this count. So we have to look at this as a 5 wave move off of the low, 1, 2, 3, 4, 5, like that, and you can see them, they are there. There's 5 waves there. Now this is where things get much uglier. This initially looked very bullish. 5 waves up, 3 waves back, you can see, and we all know what we do when we get that pivot. You buy. That's just what you do. Yeah, so you get your 5 waves up, 1, 2, 3, 4, 5, you get your 3 waves back, and you buy that sucker, and you set just beyond the bottom of that 3-wave structure, which is the 2 on the minor time frame. That becomes your invalidation point. Anything which comes back below it stops you out, and you're out the trade early if you're wrong. If you're right, you should go off and roaring into a wave 3, and we haven't done that. So we now have to consider the possibility that the time scale, the wave degrees, breaking down into much smaller definition than we would expect. In other words, rather than getting the immediate acceleration in a wave 3 on the minor time frame, we have to sit back and tolerate the building up of minute wave 1, 2, 3, 4, 5 just to get going into that minute 3, 4, 5 into that minor 3. So this is when it gets ugly. But we can still interpret this bullishly. We've definitely got a 3-wave move here. There's no doubt about that. It's on a minute time frame into minor 2. Sorry, minute, Thomas, not minuet. So we come down into that 2. Now we've got this pile of crap to deal with, and it really is just horrible and ugly, and I don't like it one bit. And if we're going to force it, which is what we're really going to have to do here, we have to force it as a diagonal, and that's what we're just going to have to live with if we're going to stay bullish. I've got a bearish interpretation which makes this a lot cleaner, and everything from this point I prefer as a bearish count. Everything up until this 1-2 swing I prefer as a bullish count. So it's just gone a bit messy. You know, we're coiling up together, we're trying to find some kind of clarity here. This here, that's 3, that's 3, that's maybe 5. So this is the idea of a 1, 2 again on the minute time frame. We'd have to label it thusly ABC, and now we're doing another bloody 1, 2. Okay, it's in here somewhere. 1, 2, or maybe it's this is a swing back up. 1, 2, 1, 2, 3, 4. I don't know. It's really getting tricky now. At this point, we're just going to say 1, 2, minuet again. 3, 4, 5, going much higher. Going to have to see some kind of reaction or resolution of this here, and then the count dies from that point because we haven't got any further price data, and I really can't make heads or tails of it. I really am forcing this, if I'm being honest with you guys. This whole section here is a mess, and although this looks clean and the 1, 2 looks clean, everything since doesn't look right. If we were impulsive in a 1, 2, 1, 2, we should have seen an immediate acceleration. 1, 2, 1, 2, which is what we're saying. Now we've gotta go flying now. Otherwise, this is, just not what we're trying to make it, or what we're trying to label it as here. I'm not saying it's not possible. I'm just saying that the longer we hang around in this sideways mess, the less likely any of this is impulsive. So that's that. We're going to save that there. We're going to come over and have a look at the next option. And we've already put the fib on it, so we don't need to worry about that. Let's just move that out of the way and go full screen. So this is a 1, 2 as well, okay, but it's not over yet. This is the alternate. In our first count, this is also bullish, guys. So just keep that in mind. I'm not saying this one is like bearish end of the world. It's just cleaner. So we go 1, and instead of going 2 to here, which we're saying, and trying to get a quick 2, when you look at the scale of a 1, 2 here. This will be the final one we deal with, which is the long-term bearish idea. This is still saying primary 1, primary 2, intermediate 1. But instead of intermediate 2 being here, it's just saying that this is going to be intermediate 2 instead. And you're going to get a flat pattern. Now, the reason this is preferable to me is because of all that garbage we were talking about here. This fits a triangle far nicer than it fits an impulsive move. So we have an impulsive move, which is an emotive wave, emotive A. Okay, so 5 waves in an A. Then we have a triangle B, and then we should have 5 wave pop into a C, and then 5 waves down in a C of a 2. If you understand what I'm saying. So let's just, so this would be A, this would be B, and this would be C. So let's just move the A over to here. Move the A over to here, sorry, the B to the previous B, and the C comes down to here. And then this is a 3 wave move into an A. If I show you what I mean. So 3 wave move into an A, 3 wave move into a B, 5 wave move into a C. The one wouldn't be that long, but you get my idea. Now, if we look at the projection so far, we can't call the length of the C until we see the B completed. So really, if this count is correct, we're going to get the same kind of violent, impulsive 5 wave move up out of this triangle. The difference is, in this count, we will, unless we're in some kind of expanding flat, we will stop prior to the previous high of the wave 1 at 347 spot 62. We will stop before then, likely, and we will come down lower. Or we'll stop short and find parity just beyond the A, or maybe we'll stop just before the A, depending on the wave structure. It could be an expanding flat. It's possible. We'd have to wait and see what kind of structure we get here. But if you did have that, you'd expect to see a 5 wave, 3 wave, 5 wave out, and then 5 waves down deeper. There is also the possibility of the previous bullish count, which of course is we just get that 1, 2, 1, 2, 3, 4, 5, and then you've got no doubts. You've got a clear impulse wave out of here. At the moment, though, I'd actually do quite like this. You've got this 3 wave move here. You've got this 3 wave move here, and a 5 wave move lower. We tagged the 50 as our first fib. So what are we going to come up and tag on the way back? Let's have a look. So what have we done? Now remember, we're in log scale. We've come back through the 50. We stopped just short of the 65. We could stop at the 61.65 or the 78.6. Let's come off log scale and see what we can see. Log scale is not too dissimilar at this level. 61.8, 65 is probably my pick. If I was going to say the C is going to complete, it would probably complete in this zone here. And then you'd have a push down at a 1-to-1 parity likely from the A length to C. Right, so that's the second count, which is we're still bullish. We've done a 1, 2, and we're doing a 1, 2, and then we're doing a 3, 4, 5. Yeah, I know it would come down deep. We came down 90% in this initial move. So retracing another huge move isn't that crazy. I know it would feel crazy and very unfortunate for the people in it, but you know, if this was correct, you'd buy it even cheaper, wouldn't you? So let's just have a look. Let's just get rid of that for a moment. So 61.8. Let's be generous then. Say the 2 finishes at the 61.8 retracement, and we get an A, B, C extension. That would put the price somewhere around 82 to 88 bucks. Okay, if we were to complete this pattern. Let's save this here. Now let's go over and discuss the final pattern before we wrap up the video. It's a bit of a long one today. A lot to think about, a lot for you to chew over. Here's the final interpretation. Right then. This is wave 1 still, so they're all bullish given enough time. That's the thing, that's the way you've got to look at them. Given enough time, they're all bullish. But you have to remember Bitcoin was bullish when it went from 20 grand to 3 grand. It's now back over towards 60 grand, okay? So that was still a wave 1 too, but look how long it took to get out of it and to get moving again. So if well, I'm not saying suggesting anything like the same time frame, I'm just simply saying wave structure wise, you can see insanely deep retracements before you make any further progress, and you have to bear that in mind. So speaking about that, this is what I'd be looking at for this wave count. We didn't go 1, 2 here, we're simply going 1. Let's just put the big wave up. Right, of course it looks insane because I haven't even positioned these. What's the point? There's just no point even thinking about it in log scale because we're talking thousands and thousands and thousands. I've just thrown it up there for the fucking sake of it. Right, so you're looking at where are we doing? So we've gone wave 1 here to wave 2 here is what I'm saying, and you've got a gigantic regular flat pattern in the middle. A, B, C, and we're working on that 5-wave structure now. So let's see how we would count this. We get down roughly here in the same way, but instead of counting this as 3 waves complete 1, 2, we simply count it as 3 waves complete intermediate A. So we're just subwaving the whole move. So we go A, B, C, A, B, C, B, leading diagonal in a 1 of 5 waves down in a C. So that means that we're going, if I just explain it, we've got a 5-wave move here. You can count this as overlapping horribly, but you know, it's a diagonal, it's ugly. We come down here in a 1, we're going to go A, B, C, in a 2, down in a 3, down in a 4, down in a 5, done. And that's the most bearish you can look at this. This brings us all the way back down to the mid to high 20s in price. So this is a huge meltdown in GameStop, the most bearish consideration there is. But if I'm being absolutely honest with it, I'm in a bit of a, you know, it's just difficult. Is what I'm saying. It's just tricky because I like the bullish count in the swing high, swing low here, where we go 1, 2, 1, 2. I like everything about that from a bullish perspective, apart from all this bullshit here, which I hate. Because I just can't make it work as an impulse wave unless I've got to break down the wave degree even further, but then we start to overlap and things start to look ugly as hell, so I just don't like it. I mean, if I move a 2 across, can I get a flat pattern here where I go 1, A, B, C into a 2? Well, yeah, maybe I can. That's another alternative. The problem with that is we've still got to get moving now. Like now. We've got to get going because we've got to get this minute wave done. And then we've got to get that forward done. Then we've got to get moving to take out towards the all-time high. So we can't hang around here much longer. If this is going to turn out to be an impulse wave, it needs to get its act together. It can't be a triangle. It'd have to be a flat because it's in a wave 2 and it's got to get going now. Right, so that's it. Next one, this can take its time, but it's going to get great in terms of completing the 3-wave structure A, B, C. But it's still got to complete that C bloody soon. Because we're putting in a triangle and we've got this downward trend line which is putting all this pressure on the price. It's clear as a bell here, ping 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 ping. Okay, so this looks like it wants to pop. This wants to pop. So It's going to come up to complete the C to complete the B, and then we thrush down in the C 5 ways and complete the 2. That's it. So very similar to the bullish count, except the bullish count is going up in 5 waves higher. This is coming up correctively in 5 waves before heading lower. But either way, they've got to move. So at the moment, I still think that initial trade I mentioned right at the start of the video, where you've got 5 waves up, right? And then you got 3 waves back, which we saw. You got this low here. Now, if you're already in, then your stop set just at this level, just beyond it. You're still in the trade at the moment. And if we do get a thrust up into a C, you can move your stop into profit and protect yourself in case we head back down. If the bullish count is correct, then we're just going to keep pushing higher. And if we do thrust back down, you're out the second this position gets taken out. If you were to, this is a triangle. Sorry, let's just say that although we've got that 1-2 count, we'd still be protected. Okay, because we can't come back and invalidate this level A unless unless the count is more bearish. So you've got A, B, C, D. 3 waves here, 3 waves here, 3 waves here, 3 waves here. So we should see some kind of 3 wave move into the E. That would bring you within a gnat's ass of this initial low. That's as tight a stop as you are ever going to get. And then we're going to head higher into that C wave. Okay, because the E cannot invalidate where the A finished, or where the C finished here. Okay, and the C can't invalidate where the A finished. So we will complete higher, giving you an excellent. If this does come down in 3 waves again and maintains its structure, that's a great trade, I think. I say great. Let's just remember how far this thing can move pre-market and post-market. This thing could go so far beyond your stop in the post-market that it could still fuck you. So you've just got to think about that. It's bloody risky no matter what at the moment, to be honest. But you know we've got to consider the trade possibilities here, right or wrong, bear or bull. This looks like it wants to make a thrust up before coming down again, and that's it. The final count being another thrust up. So they're all saying short term we should pop, short term we should pop higher, and we either come down to the depths of hell in the bearish one, we come down a bit further in the longer term bullish one, and we don't come down at all in the impulsive one. That's it, guys. That's the best I've got for you. So, enough rambling, enough waffling. Okay, so first thing I want to do before I end the video is I just want to thank the patrons who've already signed up to the Patreon. It's much appreciated. Thank you so much for your support. A lot of people taking up that 3rd tier, which is brilliant. Get a lot of added benefits there. If you have not become a Patreon yet, please feel free to head over and have a look at the page here. You can have a read of the 3 tiers. The link is in the description below on the YouTube banner and on my Twitter feed. Have a read for yourself, figure out if you're interested. I'm not going to oversell it here. Right, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, let us know what you think in the comment section below. If you want to, hit the bell notification icon to remain informed of future videos. And yeah, take care guys, I'll see you next time. Bye bye.